This is Steve with lotsofpeoples.com. I want to take you on a little journey that I call Journey to Explore the Obvious. It has to do with our real estate site and ability to present investment properties in a pretty common sense way. Our system does a analysis using the three basic approaches to evaluating property. The three approaches to evaluating property are the cost approach, the income approach, and the comparative analysis approach. The cost approach is basically trying to figure out what it would cost to rebuild a particular property, bricks, mortar, labor, and then you actually subtract some depreciation, and you figure the square feet times what something would cost in your area, square foot wise to build, and then you add the land value back on top of that. The income approach is basically what a prudent investor would expect, a certain return on the money. Like CDs right now are 2%. Most people obviously want more than that, but this is necessary to figure out like the cash flow. You take the cash flow, the annual cash flow, and divide it by what's called a cap rate, or what a prudent investor would want. Ordinarily, maybe between 6 and on the high end, 12%. The comparative analysis approach is basically what houses in the area, similar properties, what they are selling for. It's commonly referred to as comps. Actually, our system, once you put the data in, which I'll show you in a little bit, and produce a real nice common sense presentation that you can, it shows again all the approaches, equities, you can use this to present your properties to investors, or if you're a management company, it's a real nice presentation. It really does all your dirty work for you. Basically, to get started, you need to have a laptop system, the Lots of People's desktop, and you would post a property, and then once you post the property, you go back in to manage the listing. And when you click on manage the listing, you'll present this, and then you'll click on add property pool info. So once you click on that, you'll go to a form. You just fill it out. It only takes a few minutes. Add a brief description. Put in what the asking price is, what's the purchase price, and if there's any acquisition fees or additional commissions, what the estimated cost of improvements, paint, carpet, all that good stuff. You can even do high end and low end. Any other costs, like basically holding costs like utilities, insurance, taxes. If there'd be a management fee, you put that in there. To get the comps, you go to the auditor and get the auditor's value, and then go to Zillow.com, which is an online kind of appraisal site, and fill those numbers in. It'll give you a rough benchmark, at least a third-party opinion, without having to go get a full-blown appraisal. Put in the net income after taxes, insurance, management fees, basically what the income stream you expect after all expenses. Put in then your price opinion, which should probably be below the auditor's value and maybe below the Zillow value. It's really what you expect without to sell the property for. Add in the land value. That's important to get the cost approach. You can really get a general idea from going to the auditor's site. There's a thing on there it tells you improvements and then the land, and then again just put your projected sale price. The last step is essential to get the cost and income estimates for the appraisal. You go to your main laptop, click on Member Tools. When you click on Member Tools, it'll take you to this page, and under Things, select Property Pool page. Once you click on that, you'll see a page that says Edit Pool, and actually this is a summary. The percentages, we'll show you here in a bit how to get it, but if you have a pool of houses, so once you click on that, you kind of nice go in and give you a nice presentation. Say you have 10 houses, $1 million pool. For instance, if you have a back-end profit online, like an equity revenue participation, you put in a certain percentage. like on a profit or even a percentage return. Some people give an investor, do a partnership where they get a certain return and you split it, and that's what that does. It's not necessary if you don't do that. Cap rates are important. Again, what's a prudent investor want? 6 to 12%. You put that in there, and all these things affect the whole pool globally. And you'll put the cost per square foot. You put high end, low end. What do you think it would cost to rebuild it minus the land? And then you just click on update pool and you're all set. Once you do that, you have your presentation. You have a nice presentation that your prospects can view, given the estimates of all three approaches. You can easily add video tours and other pictures and things, but what's nice here, they can see the numbers, click on video tour so they can kind of see what you're talking about. So that's pretty much the end of it. Just a value summary. Even though the comps are what most people look at, there is a nice thing to be said for emphasizing all the other approaches as well. Even looking at all that when you're even considering other investments, even intangible investments like stocks. Hopefully this looks good to you, and if you want to get started, just go to lotsofpeoples.com, set up your account, or if you already have an account, feel free to use the system, and I think it will you'll find it very helpful.